The next story that I have here, which is another Nigerian story, um, which is I don't know if I'm gonna call it a controversial. I don't know if I'm gonna call it controversial or um whatever, but it's the Nigerian tax bill. This is just my analysis of it. I'm going to read it just like I always do, right? Read it on live here and then go over what I think. It's definitely not a one-page stuff, but I'm just going to read the highlights. And with the highlights, at least I think we can make some deductions out of the highlights. And if you want to read or get more information about it, this one I'm reading right now is from the Anderson. So it's ng.anderson.com. You can go to their search bar there and type the Nigerian tax bill, and definitely this one is going to pop up for you, and you can read it as well. But anyway, let's get into this. So this is the Nigerian tax reforms, analyzing the revised tax laws and potential impact on businesses and individuals. Um, I mean, taxation, obviously, I'm just going to call this out first before I even get started here. Taxation, obviously, is how any country would grow, how any reasonable, well-meaning country or society would grow. Because if you don't get those taxes, you won't be able to do a lot of things. And so it's definitely a right step in the right direction. However, me being a Nigerian and seeing and knowing a thing or two about these Nigerian politicians, it's just not very trustworthy. For instance, in Lagos, there is a robust taxation scheme or whatever, right? Where there's, allegedly the president is the current president, Tinubu, allegedly, is the owner of the tax agency or whatever that taxes the states, and then they pay some percentage to him, right? Which is very interesting, and this is how why most Nigerians don't trust stuff like this. But on the flip side, if there was a lot of trust in the country or in trust, in the politicians, then this obviously wouldn't even be as controversial as we make it to be, right? But hey, let's get into this and see what the highlights of this tax bill is. All right, it says on October 3, 2024, the President of the Federal Republic of Nigeria transmitted the tax reform bills to the National Assembly for their consideration. The tax reform bills aim to promote uniform procedures for a consistent and efficient administration of tax laws, to facilitate tax compliance by taxpayers in line with current realities. The tax reform bills comprise the Nigerian Tax Bill, Nigeria Revenue Service, Nigerian Tax Administration Bill, and Joint Revenue Board. The Nigerian Tax Bill consolidates the legal frameworks relating to taxation within the purview of the federal government, which were previously administered under separate tax laws, into a single piece of legislation. All right, they're just explaining what it's going to do and all that good stuff, right? So here it says revision of graduated tax rates for personal income tax purposes. Section 58 and the fourth schedule to the bill substitutes the. I'm going to increase this screen. I think the screen size. I think I'm getting too old now. So let's increase this and let's zoom in and so I can be able to read. All right. So we're reading this one, revision of graduated tax rates for personal income tax purposes. Section 58 and the fourth schedule to the bill substitutes the old graduating rates with a new graduating rate, thereby exempting the 800,000 naira from income tax on annual basis. This proposed amendment implies that taxpayers will pay lower taxes at lower income levels compared to the current structure. This may encourage higher disposable incomes and potentially stimulate consumer spending. Okay, at least what I understand from this first segment here is that they're exempting people earning 800,000 naira from income tax on annual basis. I don't know if it's a complete exempt or there's going to be a lower tax rate, but at least it says here exempting them from the annual tax basis. So it says the proposed amendment implies that taxpayers will pay lower taxes. Okay, that makes sense, at lower income levels compared to current structure. So 800,000 divided by 12. Let me see what that is. Hey man, my head doesn't work well these days. So let's see, 800 divided by 12. Let's see what that number is. All right, that's 66,000. Pretty much the minimum wage. All right. So that's pretty much the minimum wage right now, because the minimum wage is about 70,000, right, per month. So 800,000 per annum is around the minimum wage. Um yeah, I mean, I can't be mad at that, right? People earning minimum wage of 66,000 or less. How are you going to tax those people, man? Those people are struggling to feed, right? Those people are struggling to feed, man. How are you going to tax them? So I definitely can, I support this one for sure. I'm not even going to lie, man. These people, earning minimum less than minimum wage. How are you going to tax them? These people are struggling to feed, man. A bag of rice is over 100,000, man. I mean, come on now. In this current economy, man. Um, Definitely this first one, I totally 100% agree with this one. If possible, exempt them just like it said here, and not even the lower tax payment. Just exempt them 100% from taxes, man. Let those people breathe. Let them breathe, man. Let them get this money and just breathe, man. That's all they need to do. Well, hey, let's read the second one and see what it's about. So it says introduction of rent relief under consolidated relief allowance and requirement for tax deduction notification. Okay. It says the bill replaces consolidated relief allowance with rent relief allowance. A taxable person shall be granted a rent relief of 200,000 or 20% of annual rent paid, whichever is lower, and requires taxpayers to write to the relevant tax authority before claiming any tax deduction. The introduction of rent relief in place of CRA could be less beneficial for high rent payers and increase payee taxes for taxpayers as deductible allowance would reduce. The requirement to write to the tax authority before a relief is claimed may create additional tax burden for taxpayers. Hopefully the approval process by the tax authority is automated. Okay, that's a hope, right? That's a hope. That's a big hope there, that the approval process would be automated. Because yeah, absolutely. Because if you have to write to them, because here it says you have to write to the relevant tax authority before claiming. Um, Here it says write to the relevant tax authority before claiming any deduction. I mean, if you're going to allow people to write off their rent, rent deductions or whatever, right? Write off their rents, you know, it would be nice of you as well to automate that process rather than just getting maybe emails or writing letters to these people are going to be flooded with these letters, right? There has to be some automation in place to help alleviate this new burden. Absolutely, it's a burden. It's going to be a burden if it's just writing letters and or emails to these people to get approved. It's going to take years, and before you nah. Absolutely, I agree with this suggestion that it's automated for sure, and it's also a good thing too to give people some room to breathe here, right? $200,000 in deduction. That's a 200,000 naira, not dollars. In deduction is a great deal for sure for people who pay rent, right? All right, let's go to the third one here. It says exemption of compensation and damages from chargeable gains. I hope I understand what this one is talking about. It says Section 50, subsection 1, subsection 2 of the bill provides that sums not exceeding 50 million obtained by way of compensation or damages for any wrongdoing or injury suffered by an individual in his person or in his profession or vocation, including compensation for loss of office or unemployment, wrong or injury, for libel, slander, or enticement shall not be chargeable gains. This means that the sums not exceeding 50 million obtained as compensation or damages shall not be chargeable gains. Okay. Where the sum exceeds 50 million naira threshold, only the excess will be considered chargeable gains for capital gains tax purposes. Okay, that's a good one, right? At least my understanding of this is, say you were compensated for any reason. I wouldn't say for any reason, but they listed out some specific reasons. I would hope it's for any reason, right? But here they had some specific reasons like injury, personal injury, loss of office or employment, all that good stuff, right? If your compensation is 50 million naira, there will be no taxes on that compensation. But if it exceeds 50 million naira, then they start taxing you from the excess of the 50 million. That's a great one. Hey, these things on paper, they look absolutely great. I'm not even gonna lie. They look really great. But again, with Nigeria, just knowing Nigeria, right? Implementation is always a problem with them. These politicians and the business people as well. Implementation is just a problem. But hey, there's another one here. It says non-proration of capital allowance for companies with minimal non-taxable income. Section 27, subsection 4 of the bill provides that capital allowance computed shall not be prorated where the non-taxable income constitutes less than 10% of the total income of the company. This will ensure that companies fully utilize their capital allowances without adjustments due to a minor proportion of non-taxable incomes. This is going to help small businesses for sure. For sure, for sure. But hey, man, again, here, if you want to read the whole article and maybe even also have a chance to read the full bill, it's right here on ng.anderson.com. But anyway, you guys let me know what you think about this Nigerian tax bill and revised, I guess, that was passed on 3rd of October of this year. I think it's a good one. But again, like I said, right, implementation is going to be the problem. And I hope they implement it, because definitely taxes are something, like I said earlier, is something that every society needs to grow. So hopefully this is implemented, and the proceeds of the taxes are used for what they're supposed to be used for.